Good afternoon, everyone. For those of us who have joined or just joined in, I am your host, Aubrey Aloysius, co-founder of LorraineMusicAcademy.com and a charter member of TiE. Um, do remember to share your experiences with us and tweet at TiE Delhi with hashtag TiEcon Delhi 2022 and hashtag Unstoppable India. We want to thank our sponsors SVB, NetApp, HPCL, and Trica for their support. We have a fabulous session coming up now, and we want to thank Westbridge, our platinum sponsor, for their support. This session is titled The First of Everything: First 1,000 customers, first investor, first hire, etc., etc. And we have with us on this session, chairing the session, Mr. Arun Seth, mentor and advisor to startups and board member of Narayana Health. Aakriti, Bhargava, the CEO and co-founder of Wizikey, and Aadit, Palicha, founder and CEO of Zepto. Aadit dropped out of Stanford to build Zepto in India. Within 7 months, Zepto has raised 160 million from marquee investors and became India's fastest growing e-grocery company. One of the pioneers of the new age PR in India, Aakriti started her career with prestigious brands like Naukri.com and InfoEdge before taking baby steps into the world of entrepreneurship. Today, with a PR and marketing experience spanning nearly a decade, Aakriti takes pride in building up startup brands along with her team, handpicked by her with much love. Our chair, Mr. Arun Seth, is currently an independent director on the board of Narayana Health. He is also an active advisor to Avendus Capital, Nutanix USA, United Technologies, and Inmobi, which he incubated in 2007. He has been an active angel investor over the last 2 decades. He was a founding charter member of TiE Delhi and Indian Angel Network. Over to Arun and Aakriti and Aadit.
Hi, everybody. Welcome to this session of First of Everything. What a great topic for the audience of entrepreneurs and would-be entrepreneurs. It's never been a better time to start your own company, and the crazier the idea, the better. I recall the early days of startups in the late 90s when I lucked into being a partner in India's first angel fund called Infinity. We did well by any standard, having got a whopper of an exit with India Bulls. But the one I love most is a company called Avendus that I'm sure everybody in this audience knows about. We managed to convince 3 young investment bankers to start an advisory, as there were no advisories for startups barring the big boys like Goldman Sachs and all. It'll bring a smile to your face when you hear the name that we invested in. It was called coolstartups.com. They survived 2001 and 2008 and morphed to Avendus, and I'm very proud of what they've done. They were the first in that space. That's the big question for you. When you start, what do you do first? Money, idea, MVP, people, customer service. It's a huge gamut. And today we have 2 amazing founders. Aakriti of Wizikey, who has pivoted to a SaaS product in her space of marketing and communications. And we also have young Aadit, and I genuinely mean young. He's 19 and a dropout of Stanford. He's the founder of Zepto, which has in 7 months has taken the 10-minute delivery platforms by storm and heading to be a unicorn very soon. Please listen carefully to their experience, and I hope they will tell you not just what's worked, but what's not worked, as the learning is in what not worked most often. So let's get down to listening to them. So, Aadit, and both of you, so I mean, the format would be that I'm going to ask a question. I'd love both of you to kind of answer that.
Sure.
And with the best that you can. And we have 3-4 questions, and we leave some 5 minutes at the end of it. So now that you've taken the crazy step of dropping well-paying jobs or whatever you were doing, would love to hear your experience and advice to other budding entrepreneurs on the audience as to how do you go about the first of everything. Should you start with money, people? Just your thought on what's the first set of priorities, then the second set, and it's a never-ending treadmill. And also what worked for you and what did not. And if you had to do it again, what would you do different? So, Aakriti, would you like to start?
Thank you so much, Arun. This is a very interesting topic and very close to my heart because the first are, the 0 to 1 phase is where you do everything first. And for us, you said between business, money, technology, the first that we picked up was technology. We built out an MVP. We shipped it, and we found that the market was very excited. At least they spoke about it, that this is something really, really interesting. We got good set of customers going very quickly, and I think that helped us. Then we raised some capital base for that. uh, there were a lot of failures there, and I would love to talk about those, but in B2B business there's very little scope for failure after you've done your pmf takes a lot of time, right? And our first 10 customers helped us get the 100 customers, but PMF was like, very, very critical. Adit, why don't you also talk about B2C, and then we can talk about our failures as well?
Yeah, for sure. And I think
And
sorry,
Aadit,
sorry.
I mean, if I may add, this is your second startup. You told me at 17 you sold your first.
Yeah, I think that was a very, very small adventure, I think, by comparison. So, I don't have transparency. Probably that's the time when I made all my mistakes, albeit at a very small scale. I think what I learned, the first steps of an entrepreneurial journey, at least in my case, and like you mentioned, right, there are different approaches that people can take. You can start with the MVP that you build yourself, like working on weekends and late evenings, right? Or you can start with, I know some entrepreneurs today, like second time entrepreneurs, start with the Series A, right? Which is also, especially for capital intensive or deep tech businesses, that actually makes sense as well. And some entrepreneurs, I think this is sort of the category that I fell in. I started with the people, or specifically the person, right? So I think finding a co-founder for me was core priority. I think largely because I think most of the motivation for actually starting a business didn't actually exist, and we didn't want to build a business per se. I think my motivation was more at hand that we found something interesting that was a problem that we had faced, and we just wanted to build something cool to solve it. So I think for me, what goes along with that is finding a person that you enjoy working with, to sort of build with you. And I think that ended up not only in the very early days being pivotal to actually going ahead with the arduous journey of finding product market fit, especially in consumer transactional platforms. Like, pre-product market fit is brutal, right? Nobody uses your app, everybody hates you. You're just stuck on customer service all day. Like, I personally probably have responded to hundreds of calls, and quite a few of which have been very unpleasant, right? So pre-product market fit is brutal, and I think having the right person with you was critical for us pushing through and eventually iterating and finding product market fit. And I think obviously post PMF, that very early decision on who you make as your co-founder ends up being, I think, make or break to any successful startup. I mean, I'm sure you've seen it over your story career, that one of the easiest ways for a startup to die is just like turmoil between the founders, right? And I think having the right person, that to me is the first core step, at least in the journey that I've had.
Maybe you're spot on with that, because it's like building a house. If the foundation ain't strong, it's not going to survive.
Exactly.
I
And
count
that
on my life
relationship, that
partner
founder
as my
relationship.
co-founder.
Akriti,
Yeah.
what would you say to that?
So I count on my life partner as my co-founder. So that was not something that came to
You're
my
the
head
so
immediately.
you're the boss 2 times over.
Or yeah, we share a lot, and but it's very critical to get the first hire right, and that's where I think we found, so when you do an MVP, you ship it, it's like most likely to fail. 95% chance it will not hit it right in the first, and that's when your customers, like Adit was saying, they're very angry because it's not working. In B2B they don't express as much, Adit, so I can understand, must be really brutal for you. But you see churn, and churn is very hard because that's a near death experience, because if you're not getting the right fitment and you're not constantly talking to customers as to what you want, then the folks around you, and the first five hires matter a lot. They have to believe in the larger vision. And for us, we got an EIR in place, and that was a great hack. because this person came with a founder mindset, and he was earlier an entrepreneur, and he believed in the vision. He knew that he will get it right, and that helped us. From the first 10-12 people we got on board, we retained 60% for 2.5 years, and the 2 or 3 people who dropped out for reasons of studying. So that's something critical that helped us along the way in making several pivots, shipping many versions, getting PMF, ICP also, right? Like the ideal customer profile, we had to work very hard on it. Who's got the money, the budget, authority, the band when we were selling. So these were things critical. So hiring right people initially is something that we probably did right.
Nice. And Adit, what do you? Is once you start with getting your core team in place, what would be the next set of priorities? Is what I'd say. Once you've done that, is it money? Is it what? Because because founders have to do everything in the beginning.
Yeah, no, absolutely. I think this is this stage is probably where my thought process becomes a little bit like deviating, and because this forum is by definition a very deliberate startup journey. Like what's step one, what's step two, what's step three. For me, it didn't really go along that way, right? It was just me and a good friend building for fun because we had nothing else to do, and such like somehow we just ended up building a large business. And I think that the initial for me, the initial steps, we didn't really think. We were like raising money seemed like it seemed like something that real companies do, right? And this was just two friends that were building on a nice project. So I think for us, the priority naturally gravitated towards let's build something interesting and see what happens. And I think that which is why I think it's important, and I'm sure Aakriti has had a very similar experience. It's very important to have that ability to build your core product. Either amongst the founders or within sort of the very early team, and you don't want to be in a position where the core of the product that you're trying to ship is actually dependent on some external party or someone that you haven't hired yet and you don't have the ability to build. So just like to keep making like that, keep moving the needle in the early days, which is very difficult to do because there's nothing pushing you to move the needle. The best experience in my mind has been just being able to build what you set out to build. Now, obviously, that varies for different startups. Like, I know many founders at Y Combinator that I now work with who are starting like healthcare companies and self-driving car companies in Silicon Valley. Obviously, that's a bit different. You can't ship that out after 2 weeks of sleepless nights. That takes a little bit more time. But broadly, I think having the ability to build your own product in-house is sort of the natural next step, at least in my journey, which is sort of building the first iteration. And then over time, what we realize is, essentially, if I do have to break down the journey of a startup, it would be, in my mind, like the right co-founder, and then like a really lean team to iterate on until you find product market fit. And then post product market fit would be fundraising, and then after fundraising would be just a cycle of company building, right? And then that involves building a management team, building out the infrastructure below that management team, and then building sort of a cadence of fundraising depending on the company that you have. So to me, going from finding a co-founder to step two, I think to me the best idea would be to iterate on product market fit, especially if you're like a consumer app, right? Because finding product market fit and knowing whether you have product market fit or not is very simple, and you just have to put your product in front of people and see how they react. And 99 times out of 100, it will be a disgusted reaction, and I think that's exactly what you want, right? Until you find a palatable reaction. So yeah.
Perfect. So you gave me a cue to something which I hadn't thought of earlier. You mentioned Y Combinator. So what was your advice in today's crowded jungle of startups? Let's put it that way. Is it worth going to an accelerator or incubator or all the fancy names, or just do it without anybody? What would be your because this was not available 15, 20 years ago. Today we have a plethora of incubators, accelerators, global ones, Indian ones. What would be your suggestions to the audience?
Yeah, that's a good question. My philosophy is always that, like, see, building a startup, a successful startup, is extremely unlikely statistically, unbelievably unlikely. Like people, to go from zero to $1 billion company, the chances of that are.
You're telling me, Aadit, in 1998, we all put in $50,000, and $50,000 was something into this angel fund. We had no idea what we were up to, and we were all dead. Sorry, go ahead.
Yeah, no, absolutely. Like I'm sure you've seen much crazier times than all of us. But yeah, like for me, the chance to go from an idea to a $1 billion company is so statistically unlikely. It might as well just be zero, right? Like it rounds down pretty quickly to zero. And the thought process is that when you're facing such and if you internalize those odds, I think that's helpful as an entrepreneur to do, is just to internalize that statistic. Once you internalize that, then the philosophy quickly starts changing, which is I'm going to take any help that I can get shamelessly, right? And that's always a philosophy that I've had. I think whoever can help me, whatever scrap, I will take, right? I mean, obviously give whatever I can, but the greed is a little bit in terms of help and support. I think very early days, just to move basis points on that likelihood of success, it's important. So my philosophy has always been that if you have an opportunity to work with an incredible group of people like Y Combinator that have seen, dozens, if not hundreds of companies go into that different trajectory of success, and have some of the smartest people in the world arguably supporting you, I think that it's a no-brainer. Right? I would definitely go for it.
Great. Aakriti, what about you?
So I agree with Aadit. Being shameless is something that you learn eventually when you once you are an entrepreneur. The sooner you learn, the better it is. And learning from someone's experience is probably 10x faster than doing it yourself and learning. And if there are very smart people guiding you and telling you from their experience, you're likely going to make some right decisions along the way. And as a founder, I've learned that the more people who are invested in your growth understand that you're going to fail and that they support you. We raised from some fantastic super angels in India, and all through the first 1.5 years when we were still building the product, they stood by us. We made a lot of mistakes. We were like, it's okay, happens. What are you going to do next? They put us on the right path again. And when we finally launched our product, and B2B is a boring space, right? It's like so we got 1,000 users in the first 3 months from globally. So getting to that point was, I think, learning a lot from our investors. And I think supporting, if you get that, whether through Y Combinator or through any other source, you should be shameless and take it.
Nice. No, that's really good advice to people. So don't go out on your own. But there is now so many places to help you. Just go there.
Yeah.
Perfect. Now, one question I have is, which being an old guy, I've lived through 2001, 2008, and something is coming. We don't know what. So, given these headwinds, what's the advice you would give young entrepreneurs to be ready to be able to survive these coming headwinds? I would call it, for all of you guys, it is likely to be your first crisis. It's a different first, but that's another one that everybody has to face.
That's right. And in January, we were talking to a Russian company. We had no idea. Of course, they were very keen on the product. We went to a stage where the SOF was signed, and they retrieved, of course, after it started. In February, we would have signed, but we did not, because the impact is real on the top line, right? And it was just one business loss that happened immediately as things became really, really heated up. But we realized that this is going to take a turn. But you've taken so many, and Aadit, why don't you talk about it? Because you might be seeing a lot in logistics. Ours is a global product, but you can talk. But Arun, you could probably guide us much more. Boomerang the question to you.
But my experience may be irrelevant. I'm so old.
I don't think that's true.
Learning from experience, Arun.
Go ahead.
I disagree with Mr. Seth there. I think the experience is probably the only thing that allows us to succeed, learning from people like you. But from my perspective, so when it comes to this crisis, the I mean, my approach to dealing with it is very simple, right? You're essentially going to have, like, investors will always fund good businesses, right? I think that's the principle. Like, investors are not going to, I mean, as much as they would like to, they're not going to sleep for 2 years and just take a vacation. They will continue to invest in good businesses. The bars have gotten higher, the standards have gotten higher. And I think the idea, especially in a business like ours, is to prove really solid operating discipline. Because capital will always consolidate around players that have the best operating discipline, especially in times of strife. And the way I look at it is that, frankly, for us as well, opportunities like these are just, they're actually like, this is probably the time, if you're a good company, that you can start getting ahead. Because all of a sudden, your competitors, your peers, etc., if you're executing much better than them, it might not have mattered so much in a bull market because everybody's getting money. So everybody's moving ahead. But when you're in a market like this, very few companies have the right to progress. Right? And so if you end up being in that small bucket, you can actually start creating larger and larger leads. And if you can raise money, obviously it's harder, it's more expensive, but nobody else can raise money. If you can raise money, you're in a position where you can push faster than those people. Right? So the way I look at it is to just build a better company, and you will get funded. And you'll find that although the capital is more expensive, each dollar will garner more value as well because nobody else will be spending. I'll give you an anecdote, right? So, like, Zepto is obviously, expanding into, multiple different cities. We're marketing fairly aggressively. I mean, 60-70% of our, 65% today of our acquisition is all organic, but we're still marketing fairly aggressively. And what we saw the second the Russia-Ukraine war broke out is a lot of people are marketing very aggressive. Tons of performance marketing and e-commerce in India. We obviously had planned it out a little bit more. We weren't marketing like crazy. We had more sustainable planned marketing. And the second the Russia-Ukraine war came out, the first reaction everybody had, obviously internally, which makes sense, is to constrain burn much more, right? So like a lot of people stopped their marketing. And what we saw is that without any changes to our systems, Zepto went from like 10th or 12th in India and like shopping apps to second, just because everybody else stopped marketing. And like it's the same amount of money that we're spending, but now it's put us in a significantly higher position because nobody else is spending money. So yeah, I think you'll have to raise more expensive capital, you have to dilute a little bit more. But the key is to raise the money if you have good operating discipline and you can get ahead.
No, I agree, and I mean that's about the only thing, because I'm involved with so many startups and I'm telling them on a daily basis that, look, if you think you have 12 months runway, make sure you have 18 months. Don't worry about your valuation, because when that capital disappears, I've seen it. It's like a desert. Nothing is available at any value.
Yeah, that's true. I think
the other advice I give these founders is, don't make the mistake of taking personal debt to fund your startup just because you believe in it. I mean, apologies if there are lots of investors listening, but there's one founder, who recently shut down because of COVID, and I just told him, don't take any loans, just shut it. So the guys have invested. I mean, everybody will take a haircut, but don't take personal debt. It's very tempting. And I've got founders and I've investments in company which took personal debt and they're still struggling. So that's the two pieces which I've learned over the years. Because these, I'm not saying that the investors are there to make money, but they also have factored in certain losses. So you become one of the losses and just get on and do something else. You can never get out of the debt trap.
That's very true.
No, but by the way, sorry, there's a bit of a power outage here. So my light is. Oh, go back.
One last question, and then we'll see how, because we've got another 7 minutes left. Is, while now that we've done the first and you're there, I mean, the thoughts to you guys are, what is better at what stage, micromanagement or delegation? Aakriti?
Sure. I think there's so much to learn in the journey of entrepreneurship, when you pick up micromanagement, when you pick up delegation. I think at the basis of it is people who are working with you. And personally, for me, it's worked that, in a 0 to 1 scale, on a 0 to 1 stage of any function, there is a lot of micromanagement that is required. I have done that so that, you are able to come to the outcomes. If you're setting up a system, if you do not set it up right, the outcomes are not visible neither to you nor to the team, then essentially scaling it up and delegation would not work out as the function scales. So that's something that I have personally has worked for me. And I think people health at the core of it. If there are some folks who love micromanagement, there are some folks who love delegation, and you got to figure out how it works out the best. And there's no fixed rule that I have seen in this. Adit?
Yeah, I think broadly agree with what Aakriti is saying. My quick thought process would be, I mean, in pre-product market fit, there is nothing to micromanage because there's nobody other than you, right? So I mean, it's not micromanaging; it's just called doing everything. Right? It's you can't manage anybody. It's just you and your co-founder. So yeah, I mean, you will definitely like micromanaging. I think is a much nicer way of saying you're going to be doing the customer support call yourself. But I think that's critical. Right? I don't think that's I don't think we can debate that. I think that's probably the only way to building a successful company in my mind. Right? If you're starting a company and you feel like, okay, I'm a founder, I'm a CEO, I'm going to get somebody to do this for me. That's your dead in the water. So I think pre-product market fit for sure, you have to be in the weeds. Post-product market fit, if you don't delegate, in my opinion, it will be very difficult to scale as quickly. And that's an approach that I've taken at least.
I fully agree. Every company that I've seen has worked like that. If you continue being, but micromanagement is a nature, so it's not something that you learn. You're either a micromanager or a delegator. There is nothing in between. So you got to figure out if most founders I've seen who are micromanagers fail. They fail to scale. They don't fail. They fail to scale.
Yeah,
that's the only piece that I've learned. I've seen it in my industry, and every industry. That's a truth, unfortunately. Okay, I think we've done. We've got last 3-4 minutes left. I'm trying to read the questions, and I'm seeing if I can read them because it's so small. How is the dynamic? Somebody's asked here. I can't read who said it. How is the dynamics in the founding team figuring things out, like the MVP, and further handling growth? Or I can't. I'm apologies there. I can't read it fully, but I think what I mean, if you guys could talk, I think you basically touched on it. What's the dynamics of the founding team? Does it hamper growth?
Adit, why don't you take a stab at it first? Because I can talk about how things have to be managed in good silos when it is and collaborating at the same time. So
yeah,
go
I
ahead.
think dynamics of the founding team, when you're looking for a co-founder, what I'd say is that it's almost certainly somebody that you already know very well. And I would highly recommend that people try to hire, a concept of a professional co-founder where they just get a, great person that seems good on paper. But the idea here is you're starting a business with this person. And this, it is going to be...
It's like marriage.
Sorry?
It's like marriage.
It's
exactly. Like marriage.
Not just with your co-founder. Right? When we signed our sheet, the investor that was leading that round told Keval and I that the average relationship between a venture capitalist and an entrepreneur in the United States lasts longer than the average marriage. And you're like, oh man.
That's a good data point.
Yeah, so it's critical. You should know these people really well. And if you're getting a new person on board, whether it's an early investor, early hire, get to know that person, because this is a person that you'll be spending, decades with. So, it's important.
Yeah. Basically, I think conflicts are very, very, every co-founder should know conflicts are very, very fundamental to making anything work. There will be multiple people with a lot of, not only founders, I think the teams should be able to talk about what they're not comfortable with or what they are feeling may not make it work. So some of the questions we started asking very early, why do you think we will not survive? Or what is it that will kill us? And those questions brought out conflicts very clearly for everyone. And so conflicts should be very easily handled between either co-founders.
One last comment, because we got 2 minutes left, is the question that when you have founders, do you subscribe to democracy means equal shareholding, or one somebody definitely being the higher one? I have my own thoughts, but I'd love to hear from you. Should we, because you're friends from college, you go in equal, or you have a clear division who owns more and who's got more control?
So
Yeah, so very quickly, I think it should be equal in terms of ownership. That's for sure. But this, like, my thought process, and Kemal and I would both agree that this whole Larry Page
I'm losing you.
is very rare.
yeah, Adit, we're losing you.
Oh, sorry, can you hear me?
While we're waiting, Aakriti, why don't you try to answer so that...
So Anshul and I are both from sales and marketing background, and we went ahead and recruited a CTO and co-founder late last year. And the stage was different, and there was a good discussion on the value he'll bring to the table. There was a lot of discussion on how the structuring would be, and a fair, value was taken by him. So it depends on the stage, it depends on the skills, it depends on the relationship, it depends on a lot of things. And I think it is a good idea to have very, very open discussions about it. I took a lot of mentorship on that from various, so I took help from Sanjeev. He's been mentoring me for very many years. So go out, take help, like we said, learn from others' experience. That helps a lot.
Chalo, I think we are out of time. So can I give the stage back? Thank you very much, Aakriti and Aadit. I really enjoyed it. I learned, and I hope the audience has got some good takeaways from here. Over to you guys.
Thank you.